Kunj Bansal is also joining us on the show to talk more about markets. Kunj, there's so much happening in Ayodhya and you just come back from Lucknow. Did you hop across to Ayodhya as well in your recent visit?
At the time, though, I would have wanted to get a feel from the ground about, not necessarily about the whole temple inauguration and all, but the fact that all these activities are increasing tourism so much, both foreign and domestic, and the circulatory impact of that on the economic growth is what I would have certainly liked to see. But even though I couldn't go there, the fact remains that when you travel to leave aside tier one and two, tier three, four cities and all, you can clearly see the impact of the infrastructure growth, the new state of roads and highways, leading to industry going further down into the deeper, smaller cities, and employment generation, and of course, in the medium term, the impact of that will come on the economic growth.
Okay, point taken. Just wanted to highlight MRF. That stock is moving 5% higher. Given the size of the stock, 5% is meaningful, even though the volumes, I'm guessing, won't be that much on MRF. But it's just the stock movement, which is something which you should track, 5% higher on that one. In fact, yesterday as well, Castrol was one stock that we were highlighting, was inching higher. I think it's building onto momentum today as well. So keep an eye out on that one. And then, of course, from the broader market, a lot of stocks are sitting at all-time high level. Hoodco is one stock which is up around 12-13%. KEI is the other one. CSC, Angel One, GMR Power, and a lot of such names. In fact, this is a theme that we were discussing, Kunj. Travel, entertainment, luxury. This is the space people are willing to spend on. Whether it's hospitality, whether it's aviation, train, even airports, Dreamfolks, and the other plays. What's your recommendation as to how to play this theme?
Yeah, unfortunately, the whole consumption space in India has got divided into two segments. So generally in the market, when we talk of sectors or investment approaches, we talk, let's say, between infrastructure and consumption on the other side, talk in terms of commodities and users of commodities and things like that. It has so happened this consumption has got divided into, as I was saying, the lower end, the higher end. Now, there are multiple social implications that it's partly unfortunate also, but staying with the finance part of it, that's the hard we are facing today. We are still not seeing picking up in smaller end consumer goods, lower end consumer staples and things like that. At the same time, higher consumption items like airline, like the hotels, like the high-end cars and passenger vehicles, and all such high-end clothes, high-end shoes, all the luxury items are seeing. Uh, so that's where we are, whatever it be. But yes, there is a part of the consumption that is clearly seeing good. In terms of investment opportunities, what has happened is, and it always so happens that with markets continuing to hit new life high every day, the valuations are not remaining in any comfortable range. Of course, markets can remain irrational for far more than can remain out of the market or inside the market. So keeping that aside, in terms of valuation, one has to be and comfortable. We are moving towards the expiry, toward the quarter end, month end, year end, everything coming together. So for taking any fresh calls, maybe one can wait for any correction in the market, even though it's small. Whether that will come or not, how much will come, it's very difficult to predict because of the flows.
Have you on a bit of a scratchy line right now? We'll try to fix that, and we'll also, point which you are raising, that what's happening in tier 2, tier 3 cities is something to take note of, and one cannot, actually gauge all of that sitting here in urban centers. We need to travel in those countries and find out. My colleague Astha has looked at the equity additions happening in various, equity market additions which is happening in various smaller towns and states which were, till now perhaps not in the list anywhere. Maharashtra so far topped the list as far as equity participants are concerned, but now UP, Bihar is also catching up. So she's here, and then we'll go and talk about how to play this theme. But Astha, tell us, what does your research show?
Bihar saw the biggest pace in rise of investors in 2023 among all the states in India. This is according to the annual report of investors of National Stock Exchange. Bihar witnessed 36.6% jump in the growth of investors, which is amounted to 8.8 lakh of new customers which are added to the list this year. If we talk about all over image of the India has reported 22.4% of growth, that is 1.57 crores new investors that are registered this year. The total investors in 2023 of India is 8.5 crores. Now, if we talk about the most populated states in the country, Uttar Pradesh had witnessed 34%, which is over 23 lakh of new investors, which has the state listed in 2023, whereas Madhya Pradesh has seen 29% growth, which is approximately 9 lakh new investors added to the list in 2023. Maharashtra still being the top of the list and had the biggest pool of investors with about 1.49 crores. Maharashtra also witnessed the growth of 17% with new investors, that is 22 lakh new investors added in the list of Maharashtra in 2023.
Before we get back to Kunj about that point, you may have seen that all these market-related stocks which have already done very well. But Kunal, one stock I would like you to read for us on the charts is MK Global. It's a small, broking company based out of Mumbai. We do get some of the top guys over there as market contributors on the channel, but not as somebody who's running a brokerage. What is happening is that they've recently got a mutual fund license as well in this company. And Manish Sonthalia, who's a very senior guy in Motilal Oswal, he was heading the 25,000 crore AUM PMS there, one of the biggest in the industry, I think second biggest PMS in the industry. He's joined MK Global. One is getting, some people on the street are believing that it appears that MK wants to up their game in asset management. Hence this hire, one, and also the mutual fund license. What do the charts say? It's a very tiny company. It's a very small cap company right now. But stock kind of pull up the last 6 month chart, and if Kunal can read for us.
Yeah, I think one of the reasons why the activity has been a bit subtle because the stock is still in the ASM group. That's one of the major reasons why. So it's in the trade to trade segment. That's what we typically call, and that's why trading activity into these kind of stocks is a bit more somber as compared to the other peers. But I agree to a larger extent that it's the entire peer group which have done exceptionally well, whether it's Angel, whether it's Motilal Oswal, OFS. I think many of these stocks have done exceptionally well for themselves. MK on the chart specifically, now if I remove the ASM risk to the stock price, but then the stock has confirmed a breakout above the 140 plus mark where it's trading. So 2021 end, if I'm not wrong, the stock had a high which was closer to 130, 135 on the monthly closing basis, and it seems like the stock is about to close about those levels on the monthly basis, about that 130 to 135 mark for MK. So this could be a strong breakout for the stock.
Okay, so the risk is if you are a short-term trader, you can actually get stuck.
Correct.
But if you are a longer-term guy, it's worth maybe having that stock on the radar because some of the peers, Angel One, many others, have done phenomenally well. They are already multi-baggers, and this one is stuck at 350 crore. Do we have Kunj back? Angel One, look at that, last 1 year. Kunj is
Actually, we are missing out 361 because that's making a bit of a move right now as we speak. Let's put up 361, please, and see what kind of move that we're witnessing. Okay, not the 52-week chart because there's an adjustment. I'm talking about today's move because I think in the last few minutes there has been a bit of a perk up. So that stock is suddenly up 6%. That's what I'm talking about. 711 on 361 as well. But you know what? We are speaking with the management of Aarti Industries. That's the big stock. A lot of people are looking at. Institutional investors have been quite active in this one. And of course, the latest being that big 9-year tie-up that the company has done with the potential of 3,000 crore. They're expecting a margin profile of 20% and holding on to the long-term guidance which is there on capex, etc., despite the downturn that we have seen in the near term, especially in the agrochemicals. Listen into what the management had to tell us earlier when we spoke with them.
I think longer term, we feel that as we do more value-added product manufacturing, I think we will be there at this kind of number of 20% plus EBITDA for any new addition of products that we do. I think we have an cash also generation which is happening for this year, next year. And looking at overall, I think currently we are at 3,200 crore. We will slightly increase the debt, but I think it should be under 0.7 debt equity.
Just flagging out a few big buzzers as well. Gillette India is up 8%. You have BLS International up 7%. Spandana Spurti is spiking quite a bit, and of course HPCL and Hoodco are two stocks that we have been consistently talking about. One common theme, of course, in most of these names is the fact that these are public sector entities. Kunj, the entire trend played out beautifully for people this year, the ones who were able to spot that trend. What about 2024 now?
Yeah, so it's always difficult to predict such things, but yes, let's try to do some scenario analysis and put a few things in perspective. Uh, Specifically, if we talk in terms of PSUs, then let's keep in mind that we are headed into a general election in 2024. And while there have already been some exit polls, there'll be more exit polls coming in as we go into the general elections, and then there'll be actual results. Now, from an economic perspective, I would think so that market would always prefer a continuity of policies. So that's one that one has to keep in mind. On the other side, if the government changes, there naturally assume that the policy continuity might still be there, but could take a break for some time. And then some of the old policies will continue in the same format, some of them will continue in the new format, and some new policies will. But that will certainly create a break in between. That's how, in both the cases, specifically since it's related to government, the owner of the public sector companies is the government. The whole valuation, the buying interest or the selling interest, the price movement will accordingly. I think depending on the news flow, depending on the expectation, depending on the exit polls and things like that, will keep going up and going. Keeping all these factors on one side, let's also keep in mind that we are today in a market which is a net inflow market put together from domestic investors as well as from global investors. Now, that is also something that is contributing to continuously high demand for stocks. So if I can say in a very common words, the demand for stocks is more than the supply. The suppliers are lesser. And that's resulting in the market continuing to go. If that scenario continues, then yes, then not only public sector, I think we'll continue to see the buying demand in all other sectors, especially good performing, even the moderately performing. So that's the scenario that comes to my mind.
Point taken. That explains the scenario, but let's also talk about some of the price volume buzzers. Hindustan Copper, as we have been highlighting, has hit a 11-year high on an intraday basis. It's been advancing for 7th consecutive week now. It's trading above all its key moving averages. No surprise that 15% move that we have seen on that stock, 70% within 3 months itself. Hoodco is the other one where, of course, the fundamental news flow was the fact that the company had signed an MOU of 14,500 crores. It's gained almost 28% in a matter of 2 days. And, of course, the volume are 5x the 20-day average, and it's hit a record high today. HPCL, a bit of a breakout from the double bottom chart pattern. Volume almost 3x the average that we have seen for the last 10 days and has hit a 5-year high on an intraday basis. So some of those big buzzers are there for you on the screen, but time now to take a look at what my colleague Prakash is picking up. Seems like that the government may allow exemption from quality control order for import of certain categories of steel products. The decision will help to meet the domestic demand and control product prices, but could be negative for some of the domestic companies back home. But let's go across to Prakash to get a sense as to what was the rationale, which companies and which products are really on the anvil for this particular policy.
Yes, an important development coming in as import of some special steel products may get exemption from quality control order. A very significant development coming in as Steel Ministry has already initiated discussion on this issue. In fact, government has identified 12 such special category steel products where exemption can be given. That includes products like aerospace steel grade, heart-shaped tin box, high-speed tool steels, among others. Along with that, exemption in quality control order will be given to meet domestic demand, as industry has already approached government to provide some relaxation in quality control order in order to meet domestic demand. Subsequently, government has asked BIS licensed steel manufacturers to submit their manufacturing capacity to understand the situation of demand and supply in the market. And the final decision in quality control exemption in quality control order will be given after the manufacturer's feedback. So at one hand, it is going to provide some relaxation to these suppliers in order to meet domestic demand. Along with that, it will also help companies to bring down their overall product cost. As you are aware that the import is allowed only from BIS licensed sources for a special category steel grades covered under quality control order.
Okay, Prakash, thanks so much for joining us. But it's the day of expiry, so let's lean on the insights that Kunal has for us. Kunal, you were talking about how India VIX has actually seen a bit of a slip from that level of almost 15 and a half, and also the rollovers in the premium data.
So there are two important portions over here. One, we look out for rollover data. Of course, that will come to know by the end of the day today, and on the Bhav copy. And the second, the most important one, is the premium for the index futures. Now, historically, in fact, over the last 12 series, we were highlighting that start of 2023, I think the month of March, somewhere, the premium started to shoot up for the indices. That was generally an indication that long built-up formation or long formations were starting to get into the index trends as such. And from the March bottoms, we saw the index going up into a stronger uptrend. Now the premiums have been increasing or incrementally rising for the indices. So for example, we were on an average 120 to 140 points premium for the Nifty over the last many expiries. I think we've now shot up that premium to 160 to 180 points so far, which you've seen for the index. I think at one point there was almost a 200-point premium for the Nifty as well. So such kind of strong premiums indicate that traders are happy carrying forward long positions for the next series and rolling it over to the, for both the indices, Nifty and Bank Nifty.
Interesting. Nuresh, if I had to ask you for Jan, if there are any specific levels that you're watching out for, both for the Nifty and Bank Nifty, what will be that? Do you think 22,000 will be the top, at least the near term? And the Bank Nifty, when does it hit that 50,000 mark now?
So overall, the price points which I would be looking out to book profits is closer to 22,200 odd levels plus minus 100 points. And then around 49,200, 49,500 on the Bank Nifty. And on the downside, if we start breaking below 21,300 or below 47,800, that's the time where the trend changes. So these are the two major price points wherein I would expect the markets to trend at least for the first couple of weeks.
Okay, point taken. So that's the latest coming in on the indices. But yes, India VIX has finally seen a bit of a cool off that we were talking about. It was above 15 and a half level, and that usually talks about the nervousness and a bit of a risk in the market. For now, it's taken a bit of a slide. So just around that 14, 15 mark. And in fact, overnight, even if you look at the US CBOE VIX, that too had cooled off. So a similar move coming in India as well. What else is happening in the market? It continues to be all the public sector entities that are actually gaining ground. But Kunj, if I had to ask you for 2024, if you had to give us, some of your top bets, some of your top recommendations, give me the 2 or 3 names that come to mind.
Yeah, sure. So I would like to kind of approach the market in 2024, keeping few things in mind in the background. One is clearly the broader macroeconomic growth of the India that has been happening. So which is reflecting into multiple numbers that we can see. We can see the GST collection, we can see the direct tax collections, we can see the IIP numbers, etc. The support is coming in from inflation control. Of course, that's something that remains monitorable, especially the food inflation and the consumer price inflation. Now, on top of that, assuming just like the Fed, US Fed has already said, RBI also comes in the second half towards the interest rate correction cycle. That will be a additional booster to the overall economic growth. Going into the general election, government's focus will be on increasing the infrastructure spending, the money that it has allocated in budget for the current year FY24, and probably the allocation that it will put in for FY25 account or full budget or what. So taking a cue from these, what I think is going forward into 24, we could continue to see outperformance coming in from investment-oriented sector, mainly engineering, capital goods, and things like that. Let's keep in mind that they have already been outperforming for quite some time, and valuations are expensive. On in terms of interest rate correction and same investment demand continuing, the buying and the outperformance could extend towards the banking sector. Now, at this point, let's keep in mind that unlike the capital goods, banking sector has been a relatively lesser, has seen lesser participation in the market rise in 23. So these are the two sectors that come at the top of my mind, keeping in mind the fundamental development, the valuations, and the medium-term investment horizon.
Point taken. So that's a bit coming in the two top sectors that Kunj has on his radar. But we are ending the trading session. Just 3 minutes left for that, and it's been a very good series. 8+% kind of gain is what we have seen on the Nifty. The small cap and the mid cap indices have been up around 6 to 7%. PSUs completely, overshadowing every other sector because there was a 14 to 15 point surge there. Energy also followed quickly behind, and then metals also were higher by around 13% in the series gone by. As we've been talking about, this is the best single series gain that we have seen in 34 series, and Nifty was up around 8% in this series, and even Bank Nifty, the maximum gains that we have seen in 14 series so far.